Hi, English learners.
Welcome back to English Daily Learning Podcast, where real topics become clear, practical English.
I'm Mia, and today we are entering a world filled with numbers, headlines, excitement, and sometimes a little panic.
And I'm Leo. We are talking about the stock market.
You may hear about it on the news, at work, online, or during a conversation with friends.
The market is up, a stock has fallen. Investors are nervous. A company beat expectations.
Each sentence is short, but the language can feel surprisingly difficult.
Partly because market English uses ordinary words in special ways.
A bull and a bear are not just animals. A rally is not always a public event, and a correction is not necessarily about grammar.
Which is unfortunate because I am much better at grammar corrections than market corrections.
Today, we will make this language easier to understand and easier to use.
We will explain common words, unpack realistic headlines, and show how people talk about market changes without pretending they can predict the future.
This is an English learning conversation, not financial advice, and we will not recommend any company or investment.
The goal is simply to help you follow the language and join the conversation with more confidence. Mia, why can a simple market report feel harder than an ordinary news story?
One reason is that it compresses a lot of information into very few words.
A headline might say, tech shares slide as investors react to weak earnings.
That single sentence tells us what moved, in which direction, and why people think it happened.
But only if we understand shares, slide, and earnings.
Exactly. Market writing also loves movement verbs: rise, climb, jump, gain, slip, slide, drop, tumble, and fall.
They all describe change, but they do not all feel equally strong.
Another challenge is uncertainty. A headline often connects an event to a market move, but markets are influenced by many things at once.
So when a reporter says stocks fell on inflation concerns, it is a summary, not a complete map of every investor's mind.
Right. Good market English often leaves room for uncertainty with phrases such as may have, appears to, and investors seem concerned about.
That is useful beyond finance, too. It teaches us how to discuss complicated events without sounding absolutely certain.
We will begin with the basic nouns, then build the movement, news, and opinion language around them. Let us begin with two words people often use almost interchangeably: stock and share.
Stock represents ownership in a company.
And a share is one individual unit of that ownership.
So I might say, she owns shares in several companies.
Or more generally, he invests in technology stocks.
In everyday American English, stock is often used broadly for both the investment and the category.
British English uses shares very commonly when discussing ownership in a particular company.
You do not need to worry too much about choosing perfectly every time. Both words will usually be understood from context.
We also say a company is publicly traded when people can buy and sell its shares on a stock exchange.
A privately held company does not offer its shares to the general public in the same way.
Notice the phrase own shares in a company, not normally own shares of a company in careful financial English, although both may appear.
And we buy shares, hold shares, sell shares, or own stock.
Hold is useful because it means you keep the investment rather than sell it.
So when someone says, I am holding that stock, they're not physically carrying anything.
Hopefully not. A pocket full of paper certificates would make modern investing much less convenient.
We say the stock market as if it were one place, but it is really a broad system.
It includes many buyers, sellers, companies, exchanges, and financial institutions.
A stock exchange is an organized marketplace where shares are traded.
You may hear names such as the New York Stock Exchange or NASDAQ in international news.
Then there is an index, which tracks the performance of a selected group of stocks.
An index helps people describe the direction of a section of the market, or the market more broadly.
That is why a report can say, the index closed higher, even though some individual companies fell.
It is similar to looking at the average result of a class. The average can rise even if every student did not improve.
Useful comparison. So the market rose today does not mean every stock rose.
Correct. It usually means major indexes or a large part of the market moved higher.
We also hear sector, meaning a group of companies in a similar area of business.
Technology, energy, healthcare, and financial services are common examples of market sectors.
A sentence might say, energy stocks led the market higher.
That means the energy sector was one of the strongest contributors to the overall rise. Now let us give the market some movement.
The simplest sentence is, the market went up.
Perfectly natural in conversation. In news reports, you will often hear rose or gained.
The market rose on Monday. The index gained 2%.
Climbed suggests a noticeable upward movement. Shares climbed after the announcement.
Jumped is stronger and usually describes a sudden or large increase.
For example, the stock jumped 12% after the company reported strong results.
We also hear rallied, especially when prices rise strongly after weakness or uncertainty.
Technology stocks rallied in afternoon trading.
Is surged even stronger?
Usually, yes. Surged suggests a fast, powerful increase.
So if a price moves from 100 to 101, surged would probably be too dramatic.
Unless the writer is trying very hard to get clicks.
Market headlines never do that, of course.
Of course not.
For downward movement, the simplest expression is went down.
News language often uses fell, dropped, or declined.
Declined sounds neutral and slightly formal.
The index declined by 1%. Notice that we can use by before the amount of change.
Slipped suggests a small decrease. The stock slipped in early trading.
Slid can describe a continuing or noticeable fall. Shares slid for a third day.
Then we have stronger words such as tumbled, plunged, and sank.
The stock plunged after the company issued a warning. That sounds sudden and serious.
A sell-off happens when many people sell, causing prices to fall sharply.
We might say, a broad market sell-off pushed the index lower.
Broad tells us the weakness affected many parts of the market, not only one or two companies.
Be careful with crash. It describes an extremely sharp and damaging fall, not an ordinary bad day.
So if the market falls 0.5%, saying the market crashed is inaccurate and unnecessarily dramatic.
Exactly. Matching the verb to the size of the move makes your English sound more precise. Market reports often use percentages and points, and the two are not the same.
If a stock rises from $100 to $105, it gained $5 or 5%.
An index may be described as gaining a certain number of points.
But a 100-point move can mean different things depending on the starting level of the index.
That is why percentages are often more useful when comparing the size of different moves.
Here are 3 common patterns. Rose 5%, rose by 5%, and was up 5%.
All 3 are natural. We can also say, the stock rose to $50.
Rose by $5 describes the amount of change. Rose to $50 describes the final price.
That difference matters. Compare. It fell by $10 and it fell to $10.
Those are very different days for the company.
Very different indeed.
For small changes, a report may say the market was slightly higher, little changed, or nearly flat.
Flat means there was almost no overall movement.
It does not mean the chart literally became a perfectly straight line. Time for the 2 famous animals, bulls and bears.
A bull market is a period when prices are generally rising and confidence is strong.
A bear market is a period of substantial, sustained decline and weaker confidence.
We also use bullish and bearish to describe a person's view or the feeling around an asset.
She is bullish on the technology sector, means she expects it to perform well.
Investors turned bearish means their outlook became more negative.
These words describe direction and expectations, not someone's personality.
Although an extremely bullish person may sound very cheerful at dinner,
Until someone asks, what could go wrong?
it is also possible to be cautiously optimistic. That means you expect a positive result, but still recognize risks.
Another useful phrase is market sentiment, meaning the general attitude or mood among investors.
Sentiment can be positive, negative, mixed, or cautious.
A headline may say, improving sentiment lifted global markets.
That does not mean every investor suddenly felt happy. It describes the broad mood suggested by market behavior. Let us separate three words that often appear during big market moves.
A rally is a strong rise in prices, sometimes after a period of decline.
A rally can last for an afternoon, several days, or much longer, depending on the context.
A correction is a noticeable decline from a recent high, usually understood as less severe than a crash.
The word suggests that prices may have risen too far or too quickly and are moving back toward a more balanced level.
But calling something a correction does not guarantee that the fall will stop soon.
Exactly. It is a description, not a promise.
A crash is much more serious, a sudden dramatic collapse in prices.
In everyday conversation, people sometimes exaggerate and call any fall a crash.
Financial reporting should use the word more carefully.
We may also hear rebound or recovery after a decline.
The market rebounded on Tuesday means it rose after falling.
A rebound can be temporary. A recovery usually suggests a broader return toward earlier levels.
So one positive day does not automatically mean a complete recovery. One of the most useful market words is volatility.
Volatility describes how much and how quickly prices move up and down.
A volatile market may rise sharply in the morning, fall after lunch, and change direction again before closing.
We can say, markets were volatile, or volatility increased after the announcement.
Stable is closer to the opposite. A stable market has smaller, less dramatic movements.
Volatility does not only mean falling prices. A market can be volatile while moving strongly in both directions.
That distinction is important because people sometimes use volatile as another word for bad.
It really means unpredictable or rapidly changing in price.
The adjective works in other situations too. We can describe volatile emotions, politics, or weather conditions.
In finance, you may hear, investors expect volatility to continue.
That is a careful statement. It predicts movement without claiming to know the final direction.
And careful language is especially valuable when discussing the future. Companies regularly report their financial results, and those reports create a lot of market vocabulary.
Revenue is the money a company brings in from its business before many costs are removed.
Profit is what remains after relevant expenses are subtracted.
A company can have rising revenue but falling profit if its costs rise even faster.
Earnings is a broad financial term connected to a company's profit, especially in market reporting.
That is why we hear earnings report, quarterly earnings, and earnings season.
Earnings season is the period when many publicly traded companies release results for the quarter.
Quarter here means a 3-month business period, not 25 cents.
A useful sentence is, the company reported higher revenue but lower profit.
Another is, shares rose after a strong earnings report.
The report may include sales, costs, profit, future plans, and comments from company leaders.
Investors often care not only about the current numbers, but also about what management expects next.
That future outlook is often called guidance.
The company raised its guidance means it increased its expectations for future performance. Market reactions can seem strange. A company reports a profit, but its stock falls. Why?
Because markets compare results with expectations, not only with zero or with the previous year.
If results are better than analysts expected, we say the company beat expectations.
If results are worse, it missed expectations.
A headline might say, shares jumped after earnings beat expectations.
Or, the stock fell despite record revenue.
Despite signals a contrast. Revenue reached a record, but something else disappointed investors.
Perhaps profit was weaker, costs rose, or the company gave cautious guidance.
We also hear priced in. If good news is already priced in, investors may have expected it and bought earlier.
So when the news finally arrives, the price may not rise much.
This is a good reminder that market language often describes expectations about the future.
And it explains why good company news equals higher stock today is not a reliable language formula.
Markets love making simple stories complicated.
Or perhaps people love making complicated markets sound simple. Another phrase in financial news is market capitalization, often shortened to market cap.
It refers to the total market value of a company's outstanding shares.
In simpler language, it is one common way to describe how large a publicly traded company is in the market.
Companies may be described as large cap, mid cap, or small cap.
The exact boundaries can vary, so focus on the general idea. Larger, medium-sized, or smaller companies by market value.
Blue chip company is another common expression.
It usually describes a large, established, widely recognized company with a long business history.
That does not mean it is risk-free.
Nothing in the stock market becomes risk-free because it has a confident-sounding label.
We also hear growth stock and value stock.
A growth stock is associated with a company expected to expand relatively quickly.
A value stock is considered inexpensive by some measures compared with the company's business or financial position.
These are categories people use to discuss investments, not permanent identities.
A company can change, and different investors can interpret the same numbers differently. How does a private company enter the public stock market?
One well-known route is an IPO, which stands for Initial Public Offering.
In everyday news, we often say the company is going public.
Its shares become available for public trading, and the company becomes listed on an exchange.
So, listed company means its shares are officially traded on a stock exchange.
Before an IPO, reports may discuss the company's expected valuation.
Valuation is an estimate or assessment of what a company is worth.
The verb is value. Investors valued the company at $10 billion.
After trading begins, the market price can move above or below the original offer price.
News reports may say the shares made a strong market debut.
A debut is a first public appearance. So here it means the first day of trading.
Or they may say the stock struggled on its first day.
Again, the verbs make financial writing sound almost like a sports report.
Some companies return part of their profit to shareholders through a dividend.
We say a company pays a dividend, increases its dividend, or cuts its dividend.
Not every company pays one. Some choose to use their money to expand the business instead.
A portfolio is the collection of investments a person or organization holds.
The word is also used outside finance for a collection of creative or professional work.
In market conversations, someone may say, technology stocks make up a large part of the portfolio.
Make up here means form or represent.
Diversification means spreading investments across different areas rather than depending entirely on one thing.
The related verb is diversify. The fund diversified across several sectors.
People often use the everyday expression, do not put all your eggs in one basket.
That phrase communicates the general idea of avoiding too much concentration in one place.
We are explaining the vocabulary, not telling anyone how to organize a portfolio.
Exactly. Understanding a word and making a personal financial decision are two very different steps.
People sometimes use investing and trading as if they mean exactly the same thing.
Both involve buying and selling assets, but the words often suggest different time horizons and approaches.
Investing commonly suggests holding assets for a longer period based on longer-term goals or beliefs.
Trading often focuses more on shorter-term price movements.
A person who invests is an investor. A person who trades is a trader.
Long-term and short-term are useful adjectives. A long-term investor, a short-term move, a long-term strategy.
We also hear hold, meaning keep an investment, and sell, meaning exchange it for money.
In informal online language, people may write hodl, an intentional misspelling associated with holding through volatility.
That expression began in crypto communities and should be understood as informal internet language.
Another phrase is take a position, meaning to buy or otherwise create financial exposure based on a market view.
That is more advanced and more formal than simply saying, I bought some shares.
For ordinary conversations, simple language is usually clearer. Market discussions nearly always involve the relationship between risk and return.
Return is the gain or loss produced by an investment over a period of time.
Risk is the possibility that the result will be different from what you hoped, including losing money.
A higher potential return may come with greater risk. Notice the word potential.
It means possible, not guaranteed.
Time horizon is the period someone expects to hold an investment before needing the money.
A news article may say, the decision depends on the investor's goals, risk tolerance, and time horizon.
Risk tolerance means how much uncertainty or possible loss a person is willing and able to accept.
We should be careful not to confuse confidence with tolerance. Someone may sound brave, but still be financially unable to accept a large loss.
That is why responsible market language avoids promises.
Phrases such as could rise, may fall, and there is a risk that keep uncertainty visible.
Guaranteed profit should immediately make us cautious, both linguistically and financially.
If the future were guaranteed, markets would be much quieter places.
Let us decode a few expressions that appear frequently online.
Buy the dip means buying after a price has fallen based on the belief that it may recover.
The dip is the temporary fall people think they see.
The difficulty is that nobody knows with certainty whether a fall is temporary or will continue.
Another common term is FOMO, fear of missing out.
In markets, FOMO describes the anxiety that other people are making money while you are not participating.
It can appear when prices rise quickly and everyone online seems suddenly successful.
Chasing the market means buying after a large rise because you fear missing further gains.
Trying to time the market means attempting to choose the perfect moments to enter and leave.
These expressions often appear in discussions about emotion and decision-making.
We can say, FOMO pushed some investors to buy near the peak.
A peak is a high point. A bottom is a low point.
They are easy to identify on an old chart and extremely difficult to identify in real time.
That sentence is useful because it expresses a limitation without telling anyone what action to take. Market reports often connect stocks with interest rates and inflation.
An interest rate is the cost of borrowing money, or the return paid on certain savings and debt products.
Central banks may raise, lower, or hold interest rates.
Hold rates steady means leave them unchanged.
Inflation is a general rise in prices across the economy over time.
Market participants watch inflation because it can influence interest rate decisions, costs, consumer spending, and company profits.
A headline might say, stocks rose after inflation came in lower than expected.
Came in is an informal but common way to describe a reported number.
The inflation figure came in at 3%.
We also hear rate cut and rate hike. A cut means a decrease. A hike means an increase.
Investors are betting on a rate cut, means market behavior suggests many expect rates to fall.
It does not necessarily mean literal gambling, though the phrase betting on emphasizes uncertainty.
Another careful option is markets are pricing in a possible rate cut.
Let us slow down 3 realistic market headlines.
First, stocks edge higher as investors await inflation data.
Edge higher means rise by a small amount.
Await is a formal word for wait for. Investors are waiting for new inflation information before making stronger moves.
Second, tech shares tumble after company misses revenue expectations.
Tumble signals a sharp fall. Misses expectations means the reported revenue was below what analysts predicted.
Third, markets rebound despite concerns about slower growth.
Rebound means rise after a fall. Despite tells us the positive market move happened while concerns remained.
Headlines often remove small grammar words to save space.
For example, company shares rise after strong report, instead of the company's shares rose after a strong report.
Once you recognize that compressed style, headlines become much easier to read.
Look for 4 pieces: what moved, how much it moved, and the suggested reason.
And remember that the suggested reason may be only one part of a more complicated story.
Suppose a friend asks, do you think the market will keep rising?
We do not need to answer with a dramatic prediction.
We can say, it is hard to say, but sentiment seems positive right now.
Or, there are some positive signs, although risks remain.
From what I have read, is a useful opening when your view comes from news or analysis.
From what I have read, investors are paying close attention to interest rates.
My impression is that clearly presents an interpretation rather than a fact.
My impression is that people are becoming more cautious.
We can also separate short-term movement from a long-term view.
The stock has been strong recently, but the long-term picture is less clear.
Avoid presenting personal guesses as certain outcomes.
It will definitely double sounds confident, but confidence is not evidence.
Precise uncertainty makes you sound thoughtful, not weak.
Markets create emotional language because money and uncertainty affect people strongly.
Someone might say, I am nervous about the volatility, or I feel more cautious after that sell-off.
I was surprised by the reaction is useful when the price moved differently from what you expected.
The headlines make the situation sound worse than it is, expresses skepticism about dramatic reporting.
We can also say, I'm trying not to overreact to one day of trading.
Overreact means respond more strongly than the situation justifies.
Another useful phrase is, I am keeping things in perspective.
That means looking at the event as part of a larger picture.
If someone is excited, you can respond without agreeing with every prediction.
That is an impressive move. I would still want to understand what is driving it.
If someone is worried, you might say, I can see why that feels unsettling.
Good conversation acknowledges the emotion without turning it into financial advice.
Let us hear a short conversation between two friends after a volatile market day.
I will start. Did you see what happened to the market today?
Yes, technology stocks fell quite sharply in the morning.
Do you know what caused the sell-off?
From what I read, investors were reacting to the latest inflation report.
Was the whole market down?
Not exactly. A few sectors held up fairly well, but the major indexes closed lower.
Do you think the weakness will continue?
It is difficult to predict. The market has been volatile all week.
That sounds natural, because you explained what you knew and stayed honest about what you did not know.
We also used held up, which means remained relatively strong under pressure.
And closed lower tells us the market ended the trading day below its previous level.
No dramatic promises, no secret stock tip, and no animal noises from the bull or bear.
A successful financial conversation. Now imagine coworkers discussing a company mentioned in the morning news.
I saw that the company's shares jumped after its earnings report.
Yes, revenue beat expectations and management raised its guidance.
Does that mean the business is doing well?
The latest numbers were strong, but one quarter does not tell us everything.
That is true. I also noticed that costs were higher.
Exactly. The headline focused on revenue, while the full report was more mixed.
Mixed is extremely useful in business and market English.
It means there were both positive and negative elements.
We can say mixed results, a mixed reaction, or markets finished mixed.
Markets finished mixed means some major parts rose while others fell.
This dialogue also shows how to add balance. The numbers were strong, but
That small but can protect us from turning one piece of news into a complete conclusion.
here is a short market update. Listen for the movement words and the reason.
Global markets were mostly higher on Thursday as investors welcomed stronger economic data. Technology shares led the gains, while energy stocks slipped as oil prices fell. Analysts said sentiment remained positive, although trading was volatile ahead of tomorrow's employment report.
Let us unpack it.
Mostly higher means many markets rose, but not necessarily all of them.
Welcomed stronger data means investors reacted positively to the new information.
Technology led the gains, so that sector was a major source of the rise,
Energy stocks slipped, indicating a relatively small decline.
although introduces contrast. Sentiment was positive, but prices were still moving unpredictably.
And ahead of tomorrow's report means before an expected future event.
You do not need to understand every company or number to follow the basic story.
Find the direction, the strongest and weakest areas, the reason being discussed, and the next event people are watching.
Let us fix a few common language problems.
Instead of, the stock increased 10%, say, the stock increased by 10%.
Or use the more natural news style. The stock rose 10%.
Instead of, the price fell down, simply say, the price fell.
Fall already contains the downward meaning, so down is usually unnecessary there.
Instead of, I bought a stock of the company, say, I bought shares in the company.
Or, I bought the company's stock.
Remember that advice is uncountable. But today, we also need news, which is grammatically singular.
We say, the news is positive, not the news are positive.
Data can be treated as plural in formal writing, but singular usage is also common in everyday modern English.
Most importantly, Avoid translating a market expression word for word without checking its usual pattern.
Learn whole chunks, beat expectations, close higher, hold rates steady, and investor sentiment. If a market article feels overwhelming, use a simple 5-question framework.
First, what moved? Was it one stock, a sector, an index, or global markets?
Second, which direction did it move? Higher, lower, or nearly flat?
Third, how large was the move? Slight, sharp, or somewhere in between?
Fourth, what reason does the report suggest?
Earnings, inflation, interest rates, company news, political events, or changing sentiment may be mentioned.
Fifth, what uncertainty remains?
Is another report coming? Are analysts divided? Did some sectors move differently?
With those 5 questions, you can understand the shape of the story before learning every technical detail.
You can summarize it in one sentence. Markets rose slightly as investors reacted to stronger earnings, but uncertainty about rates remained.
That is clear, balanced, and natural.
It also works as a model for discussing many complicated news topics. Today, we moved from basic ownership words to the language of real market headlines.
We separated stocks from shares, exchanges from indexes, and small slips from dramatic plunges.
We met bulls and bears, explored rallies and corrections, and learned why volatility can move in both directions.
We unpacked revenue, profit, earnings, guidance, and the powerful phrase, beat expectations.
We also looked at portfolios, diversification, risk, returns, investing, trading, FOMO, inflation, and interest rates.
More importantly, we practice careful language for a subject nobody can predict with certainty.
It appears that, from what I have read, the results were mixed. It is difficult to say.
Those expressions help you sound informed without pretending to know more than you do.
The next time you see a market headline, begin with the movement words.
Ask what moved, in which direction, by how much, and what explanation the report gives.
Then notice what remains uncertain.
Markets may continue to move unpredictably, but the English around them should now feel much clearer.
If this conversation helped you understand stock market English, please like the episode and subscribe to English Daily Learning Podcast.
We bring you clear, practical English through real topics and natural conversation.
Keep listening, keep noticing how words are used, and give yourself time to understand complicated stories.
You do not need to predict the market. Understanding the headline is already a very good place to start.
Thanks for spending this time with us.
We will see you in the next episode.
Bye for now.